Good evening, everybody. Good evening, and welcome to another video by the Market Maker SA. It's been a while, but we're back now, and we'll be posting more frequently. Today, we'll be focusing on the order blocks. I think most people are familiar with this term and everything, but yeah, without further ado, let's get into it. So, today we're going to be looking at what are order blocks, how to identify order blocks, the down candle of the order block, and we're going to look at our charts. 4 simple topics today that we're going to look at and we're going to see. Let's go. So, order blocks. What are order blocks? The order block is an area where the banks have placed their pending orders. So this is an area where banks have put the trigger orders, the pending orders that are there that haven't been filled yet. Banks place these pending orders as they control the market. So banks, whenever banks hit these pending orders are hit, market moves very fast from those areas. It moves away from those areas very quickly, continuing the cycle most of the time. So the market maker will leave these areas with extreme volatility to the corrected direction. So there again, it's simple. The market maker will leave those areas with extreme volatility. The market maker will just the moment the base area is completed, the market maker will run from those areas. Run from these areas, and then create the small retracement back to that area and then leave, as illustrated on our blog right here. Market maker will leave with extreme volatility, retrace a bit, touch that, come back, second leg, then they leave. It's fairly simple. Next, the market maker will retrace to these areas in forms of high highs and high lows. So as you can see here, what they usually do, they'll come back with a high. When they're coming back, high, low, high, low, high. They'll be coming back there with very slow momentum, very slow movement, as they're trying to confuse a lot of people. The order block is initiated in forms of rally, base, rally, and the drop, base, drop for continuation. And then for the reversal, it's the rally, base, drop, and drop, base, rally. So we're gonna be going through specifically what those are in the next slide, but that's really what an order block is from a theoretical side. Now we'll start with our continuous pattern. Now, continuous pattern was very nice. It was very simple. This is where the market has already completed the peak formation, low or high, completed the first leg, is come back to the second leg, and it has created a level violation. The level violation thus becomes our base area. So what we have here with our first leg, second leg of our peak formation, low W formation, with our rally, impulsive move up, base. These are base area. These are pending order area, and another impulsive move and retracement back into that area, and that is where we look for our entries, leaving there. That is our first rally, base rally. That is a long setup of the order block. Now the short setup of the order block, it's very nice. Again, with the first leg, second leg, impulsive move, draw down, becomes our base area, our drop, and then we have our base area right here, the area that is full of our pending orders. Then we have our second impulsive move down for our second drop, become our dope base drop, and then a small retracement with those high highs, high lows, high low, coming into there and then leaving that area very fast. Very nice stuff right there. So as you can see, the strength of a base area is determined by the freshness of the base area. That means that the market has only come to the area only once, or more than it weakens the base area. The number of candles on the base area is vital, as well as more than 3 or 4 candles on the base area, and it is invalid and it is weakened. So what basically means is the strength of the base area is determined by if how many times the base area has came to that area. So if price comes back to that area like once and then leaves, that's very nice, that's proper freshness. But if it comes, it touches it, goes out, comes back in, goes out, comes back in, goes out, the area does not work. The area does not work. The base area is weakened, because once pending orders are triggered, market maker will just leave there, right? But in that case, if they keep on coming back to that area, then there are no base areas there. Also, if it is more than 3 or 4 candles on the base area is just a small tiny consolidation, so it's nothing confusing. But if there are 3 or 4 more candles on that base area, markets, that area is also invalid completely, as the markets don't really spend a lot of time creating those base areas, as they're crucial, they're actually important areas where the banks leave their pending orders, so they want to be quick with it, you see. Yeah. So how do you identify an order block? It's very simple. This is our order block checklist. Very nice stuff. Very nice stuff. So it starts with the structure. So what structure means, basically it starts with a structure breaker. A change of character, more or less. It starts with a change of character. The moment price comes in, comes out, and breaks that change of character, breaks that area, breaks that previous structure, creating the change of character. Market is changing direction. So the first thing we look for is a change of character. Then we look for is our bank move, our rally base rally, or drop base drop. And you see our drop base area drop with structure breakers there, mitigation block, structure breaker there. So that's very nice stuff. Next, we look for momentum away from this area. So we're usually looking for rapid candles, usually those news candles, those rapid candles away from that area. Excuse me for that, but more or less we're looking for those areas away, those rapid news candles away from that. Very nice stuff. Then next we look for our let me just finish drop base drop. Next we look for the freshness of the zone. So you can see we identify this as our base area. Next we look for the freshness of our zone. What I mean by that is has price come back to the area one time, or has it come at all? But as you see here, it's very nice stuff. You assume he came there for a second leg, and he's about to leave. It's very nice stuff. The freshness is still intact. And then next we look for our down candle. So what the down candle means is literally on the base area, more or less. On the base area, we expect at the base area, the last candle before the momentum goes to the opposite direction needs to be an opposite candle. So if candles here, let's say for instance candles here were green, red, then the last candle needs to be a green for market to go down. That officially becomes what? Your down candle, confirming, making your order block even more stronger. So that's what the down candle really is. So that's our checklist of how to identify order blocks. Very nice stuff. Next we have the explanation of the down candle. Now obviously, as I explained it in the previous slide, down candle is a type order block where the last candle or the last intruder candle for momentum continues in the base area is the order block. So what it means here is, as you see, it's very nice stuff. Here we have our drop in the red form, then our base area is created by this candle. This red candle officially creates that officially becomes our down candle, making our order block much stronger. That becomes our base area. Then the drop, then the bit of retracement back up a bit, and market is gone. So that is the down candle, more or less. It's very nice, and it's very effective. It's very effective to find on your charts. Very nice stuff. The down candle. Then yeah, that is it. That is really it. Let's look at our charts. But another one is always our reversal patterns. So our reversal pattern, the first one is a drop base rally. That's a long setup. So what we have is a drop base rally, then the retracement back to that base area confirms our reversal pattern. So what does that look like exactly? It looks like an M. It's basically the structuring of the it looks like a W. It's basically the structuring of the W formation. Same if we have our rally, base, drop. Same thing again with our rally, base, drop with break of structure, then our retracement back, that basically leaving. What does that look like exactly? It's an M. So these reversal patterns are very nice, are very simple, as they're just our peak formation low and high being formed. Thank you.